Hey guys, hello traders, and welcome back to another episode of Market on Mic. So it's good to be back to another episode on Market on Mic, because if you are listening to us for the very first time, or you've been listening to us back to back, you know that Market on Mic is actually always been here to show you how to make investing and trading decisions wisely and the sole purpose of making money. I'm your host, Daniel, today.
And Natasha. It's great to be back with you all. And in our previous episode, we actually explored the nuances, price action, and versus the indicators. Today, we are actually back with something much more better. And we're actually going to be shifting gears a bit to examine a topic that has been sending shockwaves through the global market. And I'm very sure that if you've been trading, you've been on the journey ever, even let's just say, okay, starting from January, you would know what we're talking about.
Exactly.
And we're actually going to be talking about the trade wars.
That has been we call it the highlight of this year. Since when we had President Trump come into power, it has been crazy. And it's not even literally about just traders. You don't even need to be a trader or an investor to know what's happening. If you're watching CNN, Arise TV, any news channel,
Trade wars everywhere.
Literally everywhere. Trade wars, tariffs imposed. The way the president of the United States has been imposing tariff on different economies around the world. It's been crazy.
It's been a dish of tariffs that we've actually in the past quarter.
It's crazy. He has been giving everybody tariffs. If you have a tariff on the US, trust me, you must have gotten a tariff back. Even our dear country, Nigeria, if we got hit in the crossfire. So it has actually been crazy, and it has been affecting the market widely.
Yeah.
It has been affecting the market wildly. And those are the things we'll be exposing and breaking down in today's episode. So I want you to actually sit back. I want you to relax, probably grab a coffee or your favorite drink, and just get to learn. Pick one or two things so it actually helps you in your making trading and investment decisions going forward from here.
All right, guys. So you know that just like what Daniel said, the trade wars is what has been happening for the beginning of the year. We know that was one of Trump's major campaign promises.
Exactly,
He had told us
that
once I'm in the office, I'm going to be dishing out some really hard decisions. And some people thought he was just doing his thing, but is he really even doing his thing? Because we've seen, as much as we've seen quite an amount of tariffs in the market, we've also seen this exact same amount of suspension of the same tariffs. Like even the president's won't be happy. But let's not forget that at the end of the day, with the announcement of the tariff, the suspension of the tariff, it has actually affected every aspect of this market one way or the other.
Yeah,
ranging from your currencies to your commodities to your agro commodities to your indices, your stock, and even your cryptocurrency.
Yeah, it's been literally crazy.
And I know it's been crazy because I think we've had a lot of traders that have actually made quite an amount of losses, right, this year. And one thing I'll keep saying is that as much as, yes, we're trying to follow the market in one way or the other, as traders, don't get carried away with thinking the market is always going to continue in your direction. I've said it in a couple of episodes that this market, we are the one that is actually trading it, right? So all we are doing is following, and that is why you cannot say that you want to focus on a particular aspect that is technical or fundamentals, because right now when you look at the markets, fundamentals are playing it big.
Exactly. Now, Natasha, thank you very much for that highlight. And like you said, we'll be talking about how the tariff has been affecting the different financial assets or classes, ranging from the currencies down to the commodities, the crypto, the stocks, or the futures, and the likes. So let's start from the very first one, which is the currency market. Because if you look at trade wars, how does trade war affect the market? And this trade war has caused some tremendous amount of volatility in the market. When I say volatility, the market has been moving more quickly at the moment. You can, in fact, if you're not careful, probably you go into a trade, you don't use a stop loss.
Are happening like
it goes against you and you are out of the market and things like that. So it has been causing, the trade war has led the currency to have some crazy amount of volatility. Even the US dollar has traditionally, for a very long time, has been a general safe haven. But this period, the US dollar has been under so much pressure due to the trade wars that has been happening, causing the in fact, since the beginning of the year, the US dollar has been very weak. So the recent policies has led to the depreciation of the dollar, and the US dollar actually went as low as $97. All right, that's actually
Guys,
crazy.
yeah.
That's like a 3-year low. Last time that we saw the US dollar or the dollar index, which is one of the ways to measure the US dollar itself, is the dollar index. Actually, the last time we saw the market trading at that particular price level was in 2022. And now, due to the trade wars, markets went all the way low to that particular point, which is actually crazy.
Yes, and when you look at it, like what exactly is actually causing the decline in the dollar, we can see that it is attributed to concerns over economic instability, the politicization of monetary policies. So definitely, since when Trump actually assumed office, we have seen a couple of things affect the US dollars, from the interest rate cuts to definitely we saw the rumors about recession. And you actually saw with the tariffs, and it seemed Trump was actually having a messy start.
Yeah, and those tariffs too, they were retaliatory tariffs.
Of course,
it actually caused a whole lot of mess in the market. Yes. All right. And if you look at some other in fact, all major currency pairs, ranging from the euro dollar to the pound dollar to the Australian dollar, US dollar to the New Zealand to the Japanese yen, the Canadian dollar, all of these markets, actually, we see them rising against the dollar. And even Euro USD, which is one of the major traded currency pair in the world, actually rose about 11%.
It has had an interesting, Euro USD has actually had a very interesting time this year, looking at how the dollar just keeps sinking and everything. So we've seen some really good buys on Euro USD this particular quarter.
If you look at some other currency pairs like USD JPY, has been wild against the dollar, although it has been struggling around the $142 level for a very long time. But the yen has also been very strong against the dollar. So if you even look at, let's say, the USD Swiss franc, same thing. This USD Swiss franc has been the craziest. The market has gotten to, I think, 11 or 15 years low or thereabouts, which is actually immense. All right, so the trade was actually cost the market to jitter a whole lot. So if you've been trading the currency market and you've been experiencing some losses and things like that, because I've been telling some of my fellow traders that, guys, this period, just look to short the dollar. Just short the dollar at the moment until we begin to see some easing of the tariffs here and there, before you begin to see the markets regaining, or we see investors regaining some level of strength in the safe haven, and that's in the dollar once again. So it has actually been very crazy. So now let's go a little bit further, because the currency market hasn't just been the only market that has taken this big hit.
Definitely.
Yeah, so we also see the stock or the indices market.
And I cannot forget the day that the indices market actually decided to start selling.
Wow,
It's
been crazy.
Right? Like, I actually cannot forget that day. But we've actually seen the global indices under pressure. And the equity market has not been immune to the effect of this trade war.
That's all they have.
I mean, when you look at your S&P 500, you look at your Nasdaq, they've actually experienced significant downturns. And with the S&P 500 actually falling over 12%.
That's actually
the crazy thing for us is that we're not even in the middle of the year yet. And we are seeing some major declines. Somewhere last year, everybody's talking about tech. We've been talking about tech for quite a while now, and tech is the next big thing. Money has been going into the Nasdaq 100, the S&P 500, and then in just one quarter of a new year, we're seeing that market lose over 12%. We're seeing the S&P lose over 12%, and we're seeing the Nasdaq nearly 18%.
And the S&P 500 normally takes about, like, on averagely in a year, rises about, let's say, somewhere between 15 to 21% on a yearly basis. And now in just 4 good months, you sold massively, and a whole lot of valuation in the market actually
Yeah.
was lost.
Yeah, so if you're still actually wondering what is going on, you should know that these trade wars are actually playing some really important roles when it comes to markets today. So you always want to be on the know of what is actually going on, right? So we're seeing that it's not just the currency markets, we're seeing it applied to every instrument that we actually have in the market. And we're looking at the market actually getting very close to bear market territory. Like the S&P 500, when you look at the chart and you see just how far down it has actually gone. Yeah, these are still opportunities. Let's not forget that with this particular movement, there are still opportunities to actually make very good money, right? So it is just to know what is going on. So you're able, don't forget that two things are important when you're taking your trade. You have your entry and your exit point, right? If you're able to get these two things in order, then you're going to be very good. So you want to be able to understand just how far or with what's going on in the market. So we know that right now the trade was, and I don't even know, are we seeing any end to it anytime soon?
Yeah, sure. Before we even go into that, let's also give an highlight or a highlight to one of the two major players of this trade wars.
Okay.
It's quite interesting because at the point the tariffs was for everyone.
Of course.
Then it came to a point where Trump decided, okay, I'm going to take a 90-day pause on the tariff. That was sometimes last month or beginning of this month rather. All right, so there was a pause, and one particular economy, that pause did not take an effect on them, which is actually China. So the two major economies that has been the big players of this tariff is the US and China.
Yeah,
China.
for me, I feel that China has been waiting for a time like this. And
I
don't forget
honestly-
that in the first quarter of this year, the first major sell that we actually saw on the Nasdaq 100 was caused by China's.
Yeah, that's
Like,
the case.
that was-
that was just
That
shocking the
was
market.
the first time China actually gave the US a run for their money. This was the first time, and they've said it from the very beginning. You want to come at us, we are ready for whatever you're ready to do. And let's not forget that over the years, as far back as 2020 or 2022, rather, when we saw the Russia and Ukraine, or we saw Russia and Ukraine, we saw China doing some sneaky moves, and we really did not understand. We saw them buy oil from Russia. Like, we saw them buy, and it was cheap oil because the US had actually just
Cut them off,
gave them their sanctions and all of them. So they were, and then we also saw them come the next year, I think in 2023, and they were stocking up on gold. And
What
the
was
rest of
happening?
them was just watching like what's going on. I would think, are we looking at the World War II or anything? But look at it right now in 2025. And then you're able to make sense of just how every economy or every developed economy at this point in time wants to actually be very independent.
Exactly, that's very true. And if you look at the progression of the tariffs, all right, so it was more or less like Donald Trump were given about 50% tariff of whatever they have or those economies have imposed on the US. So
Yeah.
for instance, if you are imposing about 80% tariff on the US, we'll give you 50% of that, which is about 40%.
So, Daniel, wait, before we go into explaining what the US and China, the tariffs they are throwing at each other. So, for instance, if we have someone listening to the show for the first time and they're not aware of what tariff means, can you please just give a little bit of breakdown to what tariff is and how it applies to an economy?
Tariffs are more or less like levies. For example, a particular percentage, probably you want to import something into my country, you're exporting into, like, you're importing into my country. Whatever, there's a particular percentage you pay on that particular good. So for instance, if the goods you're trying to purchase is let's say $2,000. So if you're imposing let's say a 40% tariff, so that means you're going to pay a 40% of whatever goods on top of what you're actually importing into my country. So that is how the tariff actually works. For instance, China is importing some goods into the United States, and let's say the goods is worth, let's say, $2,000 for instance. So the US are actually China instead actually going to collect about 40% in the tariff on those particular
40% more
importing into the economy. So that looks like, it has been crazy because Donald Trump was more or less like, in the United States, we don't give more than 2.5%. And we have other economies giving 80% tariff on the United States, giving 40% tariff on the United States. So it was actually more or less crazy for him. So it was like, okay, fine. Instead of retaliating with 100% or whatever you're imposing on us, we'll do 50% instead. he was just giving the free economy back to back on those tariffs, whatever they imposed on the US previously. And some economists, they actually chickened out. They were like, okay, fine, we're going to take back those policies. Exactly, we're going to take back those tariffs and things like that. But at the end of the day, it was now between the US and China refused. We were seeing the tariff go as high as 245%.
Yeah.
It just kept, China gives, or US imposed tariff, China retaliated, US retaliated again, China retaliated again. So it was back to back to back.
Yes,
And it was causing the market to jitter a lot.
Yes, and with that retaliation from China, we actually still saw the weakness in the dollar. Let's not forget that there was already a whole lot of things. When you look at the market technically as far back as the last time Trump was actually president, the dollar had the same follow-up. That means we saw a weakness of the dollar at that first year of Trump. However, I think this is the first time it has gone a little bit way beyond a certain level. When you look at the dollar now comparing to some major economies or currencies, it is really not funny. And looking at the fact that Trump is actually the issue he had with Fed Chair Powell.
Yeah.
Even before he came into presidency, he had already dotted on that. Was instated at the time he was president. So I wonder what the issue is right now.
Trump is a kind of president that loves low interest rates in the US. So in fact, when he was making his manifesto and all of that during his inauguration, he was like, he was going to make sure that inflation in the United States reduces as long as interest rates also. He was going to try to bring interest rate down. And Paul is not a dovish guy when it comes to interest.
Yeah, I think that's why with the rumor that he might be fired, we actually saw more sales on the dollar because investors are already, they love Powell. They love Powell for the fact that he's never dovish when it comes to the U. Exactly. So if you're going to be taking, and if Trump is going to be getting his way, it means that he's going to be bringing somebody really dovish into the particular economy, and that is a no-no for investors because it is where the money
that you want to put your money.
That I want my money to be.
Exactly.
So I feel at that point, Trump was able to see a little bit of sense in it. And at this point in time, with everything going on, I also said it that you don't want to look like the house is divided. Because for investors to bring their money, you need to show that you guys know what you're doing and you know there's a plan. But if you're fighting within your own house, definitely I'm not putting my money there.
Exactly, I'm not putting my money there. So that we don't make this episode too long, let's just look at how the tariff has affected the gold market and also the oil market briefly. Gold has actually been a global safe haven asset. It is used to, investors use gold to hedge against geopolitical tension, to hedge against rising inflation, to hedge against recession and the likes. And for the fact that the tariff tension between the US and China has been escalating for a while, it has been causing, in fact, since the beginning of last year, during the Middle East tension, all right, you would see that gold has been rising massively. Since the beginning of last year, we saw gold rising. Even this year alone, gold has risen over 30% even.
Wow. So gold has been that one instrument that always know how to do it the most. I saw it happen in 2020.
Exactly.
And if you follow the chart, that's the technicals of gold, you see that gold does that every 4 years. With basically politics that we have going on right now, it is actually very looking at when Israel and Palestine started their war. We saw gold pick up from that very level and just saw it climbing.
Kept on climbing.
I know with some people that lost money thinking that with payments was
and
it
just keeps going up,
just keeps. And then looking at starting from the United States campaign, whereby investors were just very conflicted about the Kamala Harris or the Donald Trump. And they had to pull out money. And we already know, just like what Daniel said, that it's a safe haven. Gold is something that as far back as our forefathers, it has been valuable. So we saw investors put money so much in gold, hold on to something that was still going to make them the money in the long run. And then and during the Trump win, we thought we were going to see that retracement in gold.
Or you just small move, like it just
gold just said, okay, let me respect your feelings. We actually saw it way back up. So we saw, and then we begin to see the weakness of the dollar, which begin to confirm. The one thing and the one person that actually interests me in the whole of this is Warren Buffett.
Should we go there? No, go there, please, because that guy is Because we saw him pulling out some major funds last year, towards the end of
towards
last
the
year.
end of the
And
year.
we're like, okay, what's happened? Is he about to die or
Like,
something?
he's about to share his properties. Like, he pulled out major money from stock, and we're all wondering what was going on. And at the end of the day, now we make
Now we begin to understand.
yes, like he's the only person, like a major investor right now, that is still on the green.
Yeah, because not in red.
He pulled out his money. This is knowing your market. This is knowing your politics,
Guys, you need to study your Buffett. You need to study him.
need to do that, because this is knowing, this is understanding economy. This is that, like, I don't think I can explain, like, understanding how people react in economies in times like this. And guys, that is why, like we say, your fundamentals are very, very important.
Yeah, very, very important.
You want to make money from the financial market, you have to be willing to enjoy the information. Trust me. And these are things that doesn't just allow you to earn from the financial market only. It opens your mind to other aspects of investment outside the financial market that you can actually take advantage of.
Beautiful. Now, let's go a little bit further, right? Let's go maybe give an highlight of probably you trade individual stocks. You don't probably trade on the futures market, or you don't trade CFDs, like that's the forex market and things like that, or you just buy and hold the stock market. Now, you might be wondering, why am I on red? Why is my portfolio on the downside? This is actually the major reason why. And for example, tech giants like Tesla and Apple, they were actually the first major casualties of the escalating war. But the share price or the stock price of this particular stock actually crashed massively. We see Tesla falling all the way from $400 per share down to 200. She's over 50. What am I talking about? Let's say 50%. All right, that's actually crazy. So all of the gains that Tesla made during the election period, everything was taken over. Trust me, I was also a casual. But I mean, it was actually quite crazy.
Ever since Elon Musk got his attention from AIs, or it's from technology to politics, so it became, I think people did not take it so well.
Yeah, true.
I think we like Elon on the tech side. Just be on the tech side. Let us enjoy you on the tech side. Don't mess, because just like it's been pretty bloody for people who actually have Tesla stocks at the moment.
Yeah,
but
true.
we're seeing him saying he's actually going to have a return back to Tesla.
Yeah, recently we see the Tesla share price appreciating back gradually due to some major factors, which will come in before we end this episode. But we're seeing him navigating back into more tech industry, producing more, maybe going into energies and creating electric vehicles that are very much more cheaper than what they used to be and things like that. So it has been giving investors, and also going to robotics, robotaxis, and all of those things. So it has been giving investors some level of confidence again in the Tesla stock, and we've been seeing it rising a little bit. Like today, we see the Tesla stock rising about 8%. This is actually quite interesting also. So some of those things has been, but the hit on the stock market was actually crazy. The tariff and the supply, and one of the reasons for that is because the supply chains was actually disrupted, which significantly impacted the operations and the stock performances of each and this particular. And it was not just in the US, it was globally. You see the crash on China's stock market, the Japanese stock market, even the Nigerian stock market. I actually got...
Did you say that I ordered?
Yeah, actually, because I had quite a couple of guys telling me, oh, I'm having some red, my portfolio is down, There was a time that they brought up the global stock market chart. Everywhere was red. It was scary. It was crazy.
It's been a really indecisive time in the markets for quite an amount of traders, especially those who are just navigating. Who just came into the market not quite long, and because we said I would make money, but now everything is like red, or everything is gone. You don't need to panic. It's fine. I think it's always like that. But when you get to the financial market, you always want to be aware of what is happening before you just like that. Like we said earlier, just use a demo first. Get to understand your fundamentals, understand the politics that are playing around the region or the instruments that you're trading, so that you're able to know how to maintain a consistent level of profit. So we were talking about
the stock
the
market.
stock market, yes, and definitely you know that most times, not quite an amount of people trade single stock.
Yeah, true.
So we see people trading more of the baskets like the S&P 500, right? Stock 100,
Downturns,
and all of that. So definitely, we've seen the markets move in a particular direction for quite a while. Yes, we're seeing retracement. Now would not be a good time to say you're looking to buy on the stock market, or what do you think?
It depends though, because from the very time that we saw Trump putting a 90-day pause to the tariffs and like we saw the markets respond sharply. So some of those losses were being recovered, and we see the markets just more or less being a little bit silent.
And even yesterday too, with the fact that he came out to take his stance on where he and Powell stand at the moment, also saw some really good strength in the market. But let's not forget that we're still trading with the trends.
Yes,
looking at the trend, it's just like I said, as much as yes, we're seeing some retracement, we don't want to just consider it as a change of trend.
True. And you also, one of the major things that actually caused the market to crash like that, even if you look at it closely, there's also some technical backings to it, right? But it has been largely fundamentals. And those fundamentals has been a little bit cooling down, right? Because we've seen Donald Trump making statement that is coming into agreement with China that the tariffs will be reduced, but it will not be zero, but it will be drastically reduced and things like that. And if that should be fully confirmed, we may see some crazy recovery in the market. Actually, you could see some crazy recovery in the market. But we just cross our fingers and hope to keep following the news and we'll respond.
Yeah, so we're hoping for at least subsequent reduction in the US-China tariff, and then we'll be able to major pullback into the dollar, at least gaining some trust. And once investors are beginning to pull out money, we can also cancel the rumors for recession because we have money back into the economy and the system. And Elon should just also help us stay on the tech side. I think we should be able to see some major recovery for the US before the middle of the year. At least
fingers crossed. Fingers crossed.
All right,
and we'll actually not end this episode without talking about how the impact of the tariffs have affected the crypto market.
How can we live here without talking about how the crypto market
the crypto, I don't know whether it has just been G3. It has just been...
Wait. So I think let's begin. We saw crypto came out and we saw it do some really good things. I think we saw some regulations on crypto. And then starting during last year, the Trump election, and we saw crypto shoot way up. Like we were talking about $106,000. I mean, we saw it go to $90,000. We saw it go to $100,000. We saw it. Our guys that were on crypto at that moment, it was a very good time, right? And then January, we have Trump in the market, and then boom.
We see the market taking a huge hit, making large retracements.
Really?
Bitcoin getting to 106, was getting to about 80, 70 something $1,000. It literally dropped. And it's still due to all of the uncertainty with dollar, the trade wars. And Trump wasn't really saying anything about crypto at the time. Again, I know with all of the promises about having crypto reserves in the United States and all of those those were like the major things pushing the crypto market further up. And he wasn't saying anything again. And you see the crypto market retracing.
We kind of just saw a very quiet Trump based on how hot he said he was bringing it. And then we saw him come into office, and it decided to take quite a bit of time to effect the things that he had actually promised. And I'd always say that, yes, we're always going to have campaign promises. When you're in the shoe, when you're actually looking at it now from the binoculars, you're able to say, okay, this is actually what I have. So I have to be able to work with this and just make the best of it. So maybe there are certain things you would have thought would have been easier to implement, but then you get that, you realize that, okay, you have to actually take a chill pill. But it doesn't mean that Trump would not do what he wants to do, because there's nothing about him. He always
does it. Yes. He says something, trust me, he's actually going to do it. And it has actually, the market has been very exciting. But at the end of the day, if you aren't managing your risk properly, you just get caught up in all of the wars and you get to lose money. So I've also had quite a number of friends that have making a whole lot of money during this period. A whole lot of money because the volatility has actually been crazy. Yeah, and let's try to move a little bit further before we end the episode. So, all of these funds, investors pulling out funds, the market crashing, and all of those and all the like. So where has or what has been the safest investment vehicle at the moment? And it's actually the bonds. All right, we see, because the bonds or the government bonds, you're literally just putting your money and you're lending the government money at that time, because government always tends to pay back.
Sure.
So the safest investment portfolio as of the time all of this, the war was crazy, was actually the bond market, right? We have the bond market.
So we see that traditional government bonds are considered safe investments during market downturn. Trade tension has also led to a re-evaluation of this particular status.
Yeah, true. Yeah, because U.S. Treasury actually rose sharply. We see the 30-year bond briefly surpassing 5%, which actually indicates a sell-off in the bond market. All right, so the shift has just suggested that investors are questioning the reliability of the U.S. government bonds as safe haven due to still the tariff and things like that. But like we rightly said, all of these issues has been slowly de-escalated. When I say slowly de-escalated, and we see the US willing to have talks with China due to trying to resolve the whole tariff issues and things like that. Somewhat has been causing the markets to, or investors to, gather a little more confidence in the US dollar.
Yes, and one thing that these trade wars are actually trying to play out, no country is an island on its own. So you cannot do everything or own everything. And we really need to do things together sometimes to get things to work. And as long as China and the US are actually going to have it, it's not about to have a sit down, right? It's to come to a conclusion that is actually going to
stand.
Yes. So the fact that there is already a talk in place is giving hope to investors as the US. Let's not forget that the US dollar is power here. We're talking world power. And before an investor will consider stocks, they've looked at currencies are more like the major play. That is why you see the currencies market is very interesting to trade. So definitely we want to see that the US and China comes to a decision on how we can actually do this much more easier. However, if it goes the other way, let's not still forget to follow the markets, because that is the goal.
Exactly. So if we're to give an idea of what to do at the moment, just probably at this time we want to maybe sit on your hands and confirm that the trade war has actually fully de-escalated before you decide to go back into the market.
Yes, and if you cannot sit on your hands, you know that, oh, for me, I need to trade. You have to just pay attention. Your awareness to every information is important right now.
Yeah.
This is not a time to say, yes, as much as you want to follow your support, your resistance, you have a strategy in place. You want to know what is happening. You have your Forex factory to always show you. And especially when you see that particular one that says Trump speak. That one, thinking very seriously, because we already know that it is the trade wars that is. So if you've been wondering, probably you've been losing a couple of dollars, and you're wondering what's going on, trades are not going my way, you should know that the trade wars that is happening. So it's time for you to do a little bit of digging. Okay, what I'm trading, how is this affecting this particular instrument? And you would see that you're able to adjust yourself and follow what the market is doing.
And just basically manage your risk properly.
Yes.
Yeah.
Please, it's important.
Very, very important. Manage your risk properly. And don't fret, because in the very short while we'll see the market, see the market coming back, being much more stable, and definitely you can pick up and make maybe you've lost money, you can recover all of the money that was lost and just still have your year end in the green, or have this quarter end quite interesting for you. To round everything up, trade wars are just more than just political maneuvers, right? They are tangible, they have tangible effect on the financial markets worldwide. That's why you need to be very careful, manage your risks properly, and have your ears to the ground at all times.
Yes, and as we have discussed, currencies, stocks, cryptocurrencies, bonds, and commodities, all of this responds differently to this tension, right? So for traders and investors, please staying informed and adaptable. Adaptable is actually very crucial.
Yeah.
So don't say, oh, I have a strategy that has been working last year. What is moving the market now is different. You want to be able to adapt to that,
the current market
and
conditions.
Save yourself some unnecessary losses.
Yeah.
Don't hold on to strategies. One thing about trading, the market is dynamic, is what we understand. So we want to be able to adapt to every change that is actually going to come into play.
All right, yeah, thank you very much, Natasha. This was quite exciting, if you
Very
ask me. Yeah.
exciting. Yeah.
So, lastly, the tension of tariffs has caused the stock market to crash and actually caused the gold market to rise massively. So, you need to understand how geopolitical tensions or geopolitical development affect different markets and how they respond and how this market responds to this this tension. So, you need to have a diversified portfolio. Don't just stick to trading on the stock market. Diversify. Look at the commodity market. Look at the crypto market. All right. Understand market correlation. Keep your eye on geopolitical development, and actually really can help you navigate in these uncertain times.
Yeah, guys. And it's been another exciting episode for me. I just want to say thank you to everyone
Thank you, guys,
for this episode of Market on Mic. And let's not forget to subscribe, like, share, and comment on this episode. Don't forget, what Market on Mic, we are actually here to make this trading very easy for you. So there's not going to be a lot of complications. So if there's anything you want us to talk about, you have questions, please don't forget to comment. Don't forget to drop. Don't forget to follow us on social media. We are on Instagram and Twitter,
Market on Mic.
So please, you want to hit that follow button. You want to send us messages and subscribe to this.
All right, guys. Thank you very much. Until next time, trade wisely, stay informed, and see you in the market. Bye.